So this morning we had the revision of the non-farm payroll, which shows that the US economy added 911,000 fewer jobs between April 2024 and March 2025. And on record, this is the largest preliminary downward revision. Now, about 3 weeks ago, I said if SMCI could not stay above support at 43.60, then look for a pullback to 40.81. Take a listen. The stock cannot stay above current support at 43.60, then I want you guys to look for a pullback to 40.81. Now, 2 days ago, I said if Palantir, ticker symbol PLTR, could stay above support at 150, then look for a run back to 161. Take a listen. Now, to the upside, if Palantir can hold above current support, then I want you guys to look for a 5% run to 161. So, looking at the current chart, you guys can see that my analysis on Palantir stock was 100% accurate. And with that said, if you'd like more accurate price predictions, then consider subscribing to the channel. Now, yesterday's guest on CNBC says that this AI-driven bull market will continue, but a near-term pullback is likely. Take a listen.
Our next guest says a near-term pullback is a buying opportunity, especially for AI-driven leaders. So here with more is Evercore's Julian Emmanuel. We were speaking about this earlier on the show. I don't know if you had a chance to listen, but for so long, AI seemed like a buzzword, and all you had to do was just drop it here and there in an earnings call, and you got a little pickup in your stock price. But now we need to really see some of those gears turning. We need to see what it means to actually be capitalizing on AI. What should we be looking for here, even if you see some choppy movement before we really take off?
Yeah, and look, again, if you think about it within the context of the last great technological revolution bull market, the internet of the late 1990s, choppy movement is part of the script. And so in that respect, considering we've gone up almost uninterrupted since the April low, which itself was a scary chop, as we know, it's to be expected that we might have a little bit of indigestion, particularly September into October, when we've got uncertainty. We're going to have a payroll revision number tomorrow that everyone is sort of focused on. And again, the inflation figures, tariff rulings from courts, all of these things together. But what we're looking for specifically is the continuation of this dialogue from corporate America in general that we've heard for the last several months, that they're actually becoming front foot on talking about how they're using AI to generate revenue, not just the cost save, it's the revenue generation. And you're seeing it across industries. And for us, that really bodes well for the setup into 2026.
It's interesting because Sherry Paul from Morgan Stanley was on earlier in the show, and she said, yes, of course, there's tariff noise, there's other macroeconomic uncertainty. You're talking about CPI and PPI and maybe a jobs revision. But she says that doesn't really matter so much because innovation is where it's at. You got to stay focused on AI. But you're sort of saying, yes, but we could be choppy getting there because of those macroeconomic headwinds. But basically you're saying, hold tight, use the opportunities.
We are, because again, going back to, and if you think about sort of February, March, and April, great bull markets, and this is a structural AI technology-driven bull market, great bull markets find ways to try and to get investors to get off the theme, to do some selling. And our feeling here is you don't do that because basically when you think about it, what really drives stock prices higher in the long term is earnings, and we're very optimistic on earnings into 2026.
Okay, so you talked about revenues, now you're talking about earnings. Can you give us some more specifics? If you're someone that doesn't know that much about the AI trade, you just know it's the future, but you're also maybe a little worried it's a bubble, because you also talked about sort of that bump that we felt in the late 90s when we saw this last big internet revolution. What should you be looking for as you're choosing your investments on those dips for AI?
Well, I would say the default is always, and this is sort of the natural gravitation of the AI trade itself, is that the index weightings have become much more convex to the AI theme.
Now, going into the rest of the video, I have some important levels for you guys to watch on AMD, Advanced Micro Devices, Intel, ticker symbol INTC, and Robinhood, ticker symbol HOOD. Let's go ahead and start with ticker symbol AMD, Advanced Micro Devices. So current support for AMD is going to be at 151. If the stock cannot stay above this level, then look for a 6% pullback to 146. And if 146 failed to hold as support, then look for a further pullback to 139. And from current price, we're looking at a decline of 10%. Now to the upside, if AMD can break above current resistance at 160, then I want you guys to look for a 10% run to 172. And if the stock can get above 172 and use that level as support, then look for a run to 184. And from current price, we're looking at a return of over 18%. Overall, to the upside, my price target for AMD remains at $200 per share. Let's now take a look at Robinhood, ticker symbol HOOD. So current support for the stock is going to be at 115. If it can't stay above this level, then look for a 9% pullback to 107. And if 107 failed to hold as support, then look for a further pullback to $96 per share. And from current price, we're looking at a decline of 18%. Now to the upside, if Robinhood can stay above current support at 115, then I want you guys to look for a 5% continuation to 124. And if the bulls can break above 124 and use this level as support, then look for a further run to 134. And from current price, we're looking at a return of over 13%. Overall, we could see Robinhood stock push all the way back up to 142. And from current price, we're looking at a return of over 20%. Let's now take a look at Intel, ticker symbol INTC. So current support for Intel is going to be at $24 per share. If the stock cannot stay above this level, then look for a 6% pullback to $22.90. And if $22.90 failed to hold as support, then look for a further pullback to $21.76. And from current price, we're looking at a decline of 10%. Now to the upside, if Intel stock can break above resistance at $24.77, then I want you guys to look for a 7% increase to $26.27. And if the buyers can push the stock above $26.27 and use that level as support, then look for a further run to $28.34. And from current price, we're looking at a return of over 15%. With that said, my overall target for Intel remains at $38 per share. And from current price, we're looking at a return of over 55%. All right, guys, if you like today's video, please go ahead and leave a thumbs up. And if you're currently watching and you're not yet subscribed, do consider subscribing. As always, thanks for watching, and I'll see you guys in the next one.